Hello traders. The title of the video is how to fix Elliott wave count from multiple viewpoints. Alright, so recently we have recorded a video about this particular stock, American Tower Corporated, Epic AMT, Alpha Mike Tango. This is an American stock that belongs to the communication services sector, telecom services. Today we want to talk about how to fix Elliott wave count from multiple viewpoints. So I've been talking about this for some time, and this is a very interesting scenario because last time we were talking about the irregular first Elliott wave. All right, so I will not go back to that topic today. All I will say to traders is to watch that video that we titled "How to Identify the irregular first Elliott wave precisely." So in that tutorial, we were talking about our Elliott wave count guidelines that usually we will look for an inverted head and shoulder chart pattern at the end of a down move or a correction. And we will probably call this one the first Elliott wave, while the irregular Elliott wave normally is starting from here for some traders. Now, what you need to do, because you count your wave, you are satisfied with your wave count, Other traders also count their wave, they are satisfied with their wave count. Another group of traders, and they get into conflict, a clash, and one group say, our wave count is good, this one wave count is good, your wave count is bad, this is a useless wave count, and all kind of discussions start going on. I'm not saying that those discussions are useless, but the point I'm making that it's a bit of waste of time. All right. So personally, as you are trading, because other traders may influence your trade, you want to know what's going through their mind, yes or no, because they will not going to come to your trading room to argue with you and say, no, don't sell yet, don't buy yet. They will place a trade, and that trade may end up how do I put it to you, standing against your own trade. All right. So we see the example of our standard wave count. It will be from here, other traders from here. But look carefully. Another group of traders, I'm looking at this one because I look at it again and I find it quite interesting. That's why I'm recording the video. Another group of traders may say, George, now normally we say that the signature of the bull is the first wave, and the first wave should normally break, all right, above, it should break resistance on the left hand side. We may say, okay, this one here, I should break the resistance on the left hand side. It did break this one at least, all right. All right. So now another group of traders may say, George, in 2003, which is right here, we have the commodity boom. So George, in fact, what has happened here? This is a trend in fact in 2003. It didn't go above the prior, so this is didn't go above the high of the prior trend if we consider this as a trending phase. Personally, I would disagree that this is a trending phase, but other traders may say this is a trending phase followed by a correction that has ended in 2009. For those traders, their first Elliott wave, some of them would say from here. So they will say, you see what the exercise we are doing here, this is a practical exercise for Elliott wave count. Those traders may say this is the first Elliott wave. 2009, the stock market has started a bullish trend, and those traders say this is the first wave, George. This move from here to here is just, another trend, and followed by a correction. An Elliott wave cycle has ended here, and this is the first wave, this is the second wave. And then they go around saying that our third Elliott wave is subdivided into 5, so they will say 1, 2, 3, 4, 5. So they say the third Elliott wave, George, has ended here. For those traders, they will say that the fourth Elliott wave is not this one, George, you stupid boy, and this is the fourth wave. We are now in a fifth wave. So for the first group that we were talking about the irregular first wave, those traders, we do not have too much disagreement with those traders because the only difference that they start counting their first wave here, and we start counting our first wave from here. But from the new group of traders, we have a little bit of difference here because their first wave is not our first wave, it's part of our third Elliott wave. So they say first wave, second wave, third wave, fourth wave, and fifth wave. But you will see that What we are calling the fifth wave extension is also part of what they are calling the fifth wave. The disagreement is not big, isn't it? So will you agree that talking about the first group, they are call it from here, and us call it starting from here, another group starting from here, you will see that all of us all together, though we are counting the wave from different viewpoints, we will all make almost the same decision. So probably we all be buying here, and buying here, and buying here, and we all now will say we are in a fifth wave with a little bit of difference. So we'll be arguing with those traders that this is the first mana wave of the first wave, this is the second mana wave of the fifth wave, this is the first mana wave of the fifth wave, this is the second mana wave of the fifth wave, and we will be saying that what you people are calling the fifth wave is in fact the third mana wave of the fifth wave, and there is a high chance that we may see a pullback before we see the fifth mana wave of the fifth wave. Is there a big difference? No. Now, why do we need to know what's going through the mind of other traders? Because those traders can also influence, okay, our trade. When I start, learning about the Elliott wave, I see all kind of conflict among Elliott wave traders, and I say, hold on a second. I don't want to get into this kind of discussion. I don't want to waste my time. Okay, talking what's going on. So I'm looking for something that is working. What is working here? Now, the bottom line, my friend, is that whichever way you put it, all right, make sure your motive is in a rising channel. So, the trending first, though some traders say this is a trending first, it's an impulse move, all right? It's not a trending first in my view because it didn't go above this one. In the language of Elliott, you understand. Understand that. Whenever you're about to get into those kind of argument, or if you want to shut down that kind of argument, just draw a channel. Is the motorway in a rising channel or in a declining channel? Is there an area wave violation? All right, and so on. But practically, when we are trading, what do you care about? You don't want to lose. That's the first thing. The second thing, you don't want to lose. The third thing, you don't want to lose. That's what you do care about. You just don't want to lose. So you want to go, you don't want to ignore those traders, you don't want to put them aside, you don't want to discount their wave count, you want to understand what is going through their mind. And if you notice that there is one particular group, that may see it in a completely, a different way, which is completely, far apart from your wave count, you want to keep your eyes on those traders. You understand? So this exercise is it's like a war game. You are going into the mind of your enemy to go ahead of them. So if you notice that suppose here there is a big divergence between our wave count and other traders, those are the traders we need to watch. What is going through their mind? What will they do? All right? So when we see a different reaction, or suppose you are expecting, for instance, we are now expecting a northerly, a fifth wave extension, but the price can just go like this, to the target, without pulling back and do that. So the reason why you want to keep your eyes on those traders is because if the price, you forecast the market with your wave count, your expectations there, but you see the price printing something else. You want to understand why the price did print that. And very often, by using a multiple viewpoint, you can understand why we have that reaction. A few years ago, I did what we call an Elliott wave analysis of the dollar yen. I think it was on a weekly chart. And there were some traders that were counting the Elliott wave in a different way. And it happened to be that those traders are powerful market participants. Some of those people even advise, hedge funds. But their wave count was completely upside down. I mean, not completely upside down, but I have some question I can ask those people. I'm not saying that those are experienced, qualified Elliott wave analysts. So this is why we do care about different viewpoints when it comes to Elliott wave count. So in order to fix your wave count, apart from we can discount completely if there is an Elliott wave violation, you can discount it. But sometimes you'll be surprised. You will be surprised because people are looking at different data. Sometimes you may see an NGO violation and you wonder what's going on. All right? If there is an NGO violation, point it out. Know that this one, there's an NGO violation. Look at it from different angles. Go to the higher time frame. And also to fix your area wave counts, okay, you want to see, talking about a multiple viewpoint. So you are looking at it from the viewpoint of other traders, other group of technical traders. But there is another viewpoint, which means different time frames. You remember the higher degree wave count and the lower degree wave count. So now that you finish here on the monthly chart, you will go to the yearly chart. So multiple viewpoint from the viewpoint of traders, other traders, viewpoint, using different time frame also. This will help you to fix your area wave count. So this will conclude our discussion because I think it's a very important subject to clarify with traders. So we start moving along nicely, all right, and improve our wave count. So if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. This will conclude our discussion today about how to fix area wave count from a multiple viewpoint of other traders, viewpoint of other technical traders, viewpoint of hedge fund, viewpoint of investors, okay, your own viewpoint, and also viewpoint talking about multiple time frames. If you find this video truly useful, let us know by giving us the thumbs up. If you think it's another useless recording, mark it down. Okay, if you think it's an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to fix area wave count from multiple viewpoints. Happy trading to you all and speak to you soon.